ExxonMobil just committed another $6.8 billion to Guyana, putting its weight behind a project that will move 150,000 new barrels a day by 2029. It puts Guyana on the global production map, signals consolidation of technical talent and capital, and marks a shift away from the North American shale hype cycle. I'm Mark Roach, and this is FutureWise Energy. What stands out is not production growth alone, but the sharpening split between those able to operate at scale and those left recalculating their exposure. Wood Mackenzie and Novi Labs are embedding AI across well analytics, over 4 million wells in scope. But margin compression costs across U.S. shale persist. Weatherford's deal in Romania is a clear read. Production optimization is no longer a differentiator. It's a necessity. Permian Basin performance remains ahead of the curve now, with new Q1 wells breaking the 1,000 barrel per day barrier. That's the exception. The Bakken and Eagle Ford are holding flat. Overall rig counts have slipped just 15% since January, and consensus is that we're building toward U.S. liquid output contracting by 200,000 barrels a day over the next 2 years. Labor is shedding. Major operators are cutting deep. Chevron alone will shrink its upstream workforce by more than 20%, and ConocoPhillips is answering its marathon integration with substantial layoffs. Deal flow is concentrated amongst players with the right assets, the right policy links, and enough capital to keep drilling. Schlumberger is targeting incremental gains, not bets on turnaround stories. Regulatory hurdles and failed cross-border deals reinforce one point: survival runs through capital discipline and political alignment, not hope or promises. Production news abroad. China increasing Wenchang, Uzbekistan rebooting gas underscores how little space there is for error or sentiment in U.S. upstream. Operators here are learning to privilege flexibility, risk management, and coalition building over volume targets. This is the field that remains. Rewards tilt toward the technically competent, those who know which barrels to cut, which partnerships matter, and how to operate through policy pivots. There's no inspiration here, just the reality that capital and regulatory leverage decide who endures. I'm Mark Roach, and this is FutureWise Energy.